Welcome to all the students once again. We have started the unit 4 of Capital Market and Financial Services subject, that is Securities and Exchange Board of India, SEBI. In the previous lecture, we have seen the establishment, background and the functions of the SEBI. Today, we will see the powers, achievements and the regulatory aspects of SEBI. Let us first begin with the powers of SEBI. The first is powers to make regulations. See, the board has the power to make regulations. Board means the board of the members which are constituted, which we have seen in the management of the SEBI, that it comprises of a board of members. So that board has a power to make regulation. What regulations they can make? See, the businesses in stock exchanges and any other securities market, they can make regulations in respect of the businesses in stock exchange and in any other security market. Second, the working of stockbrokers, sub-brokers, share transfer agents, bankers to an issue, trustees or trust deeds, registrars to an issue, merchant bankers, underwriters, portfolio managers, investment advisors, and such other intermediaries who may be associated with securities market in any manner. Thirdly, the working of collective investment schemes including mutual funds. And fourth, the substantial acquisition of shares and the takeover of the companies which are taking place. So they have the power to make regulations on these particular aspects. Okay. Now next power is government powers to SEBI. See, the government has concurrently delegated to SEBI most of its power under the Securities Contract Act 1956 for ensuring more effective protection of the interest of the investors and creating an efficient and well-regulated stock market. So Finance Ministry and SEBI will continue to exercise dual jurisdiction. So what the power the government has provided to SEBI is to ensure the protection of the interest of the investors and to see that the stock market is working efficiently with well-regulated rules and regulations. Okay. Now next is power of recognition of stock exchanges. See, the SEBI has following powers in respect of recognition of stock exchanges. First, it has the power relating to the submission of applications for the recognition of the stock exchanges. Second, it has the power relating to grant of recognition of stock exchanges. To grant the recognition to the stock exchanges, the SEBI has that power too. And thirdly, it has the power to withdraw the recognition of a stock exchange. It can also withdraw the recognition of a stock exchange. If it can give a recognition to a stock exchange, then it has also the power to withdraw that recognition of the stock exchange. So this is the another power which can be exercised by the SEBI. The fourth is power to make or amend rules. See, the SEBI has the power to make or amend rules of articles of association of a stock exchange regarding voting rights to members of a stock exchange at any meeting. So this power has also been granted to the SEBI. Next is power to call for information. See, it has the power to call for information from undertaking inspection, conducting inquiries and audits of the stock exchanges and intermediaries and self-regulatory organizations in the security market. See, all the self-regulatory organizations which are working in the security market, the intermediaries and the stock exchanges. So the SEBI has the power to conduct inquiries and audits of these stock exchanges and intermediaries which are working in the securities market. Okay, so this is what power to call for information means. The next is power of penalizing. See, SEBI has given powers of penalizing failure to furnish information and returns for which a person can be fined up to 1,50,000 rupees. So SEBI has given powers to penalize intermediaries for not entering into agreements and failure to redress grievances of the investors. So mutual funds can also be penalized for default, including non-registration and management company. Government has empowered the SEBI to penalize brokers for non-issue of contract notes, non-delivery of shares and charging excess brokerage. If the brokers also charges excess brokerage, or if they are not doing their work well, or they are delaying the delivery of share certificates, then SEBI has the power to penalize them too. Okay, so market intermediaries can be fined up to 5 lakhs for indulging in insider trading. See, what does insider trading means that a stock exchange, when the stock market works, there are many people, there are many members in the stock market who knows कि कौन सी कंपनी कब अपना शेयर डिक्लेयर करने वाली है. तो क्या करते हैं, इसी का फ़ायदा उठाते हैं और वो पहले से ही उन शेयर्स के बारे में उनको इन्फॉर्मेशन रहती है. तो दे जस्ट गेट एन आइडिया हाउ टू ट्रेड अबाउट और हाउ टू गेट दीज शेयर्स वेरी वेल, कि सबसे पहले कैसे मिल सकता है, क्या हमको फ़ायदा हो सकता है. तो वो उस इंफॉर्मेशन का फ़ायदा उठाते हैं. तो उसको इंसाइडर ट्रेडिंग बोलते हैं. सो स्टॉप दैट इंसाइडर ट्रेडिंग ऑल्सो. सेबी ने बहुत सारे स्टेप्स लिए हैं सो दैट दिस कैन बी एबॉलिश्ड और दिस कैन बी or this practice can be lessened to some extent. So this is what insider trading here means. Okay, the next one is powers to issue directions. See, SEBI has power to issue directions to all intermediaries and persons associated with the securities market with a view to protecting investors or securing the orderly development of the securities market. Okay, so these were the powers which are granted to the SEBI. Now we will move on to the achievements of the SEBI. So let us see the achievements of the SEBI. The most and the important achievements of the SEBIs are as follow. The first is the SEBI has made some regulation for proper disclosure to investors through prospectus. SEBI has made it obligatory to disclose the information through prospectus. So SEBI has made an obligatory thing to make everything all the information to be made available in the prospectus of the company whenever a company wish to issue its share in any of the stock exchanges in India. So all the information has to be disclosed in the prospectus. Nothing can be concealed from the investors. Okay, the next is SEBI has issued guidelines for the merchant bankers, how they have to work or how they can participate in the capital market. Next, it also has provided advertising code for mutual funds. The next is SEBI has made it obligatory for the mutual funds to publish balance sheets. Okay, mutual funds have to publish their balance sheet also. It has drafted guidelines on share transfer agents and registrars to an issue. Then it has issued portfolio management service guidelines, how portfolio management has to work. So this service guidelines are also being issued by the SEBI. Then it has issued drafted guidelines on insider trading. Yes, the insider trading, and now only I have told you what is insider trading and what are the guidelines which are being drafted or issued by the SEBI in order to lessen the practice of this insider trading going in the capital market or in the stock exchanges. Next, it has introduced stock invest scheme to eliminate delayed refunds. Okay, so these were the achievements. More, trading in derivatives. Trading in derivatives has been introduced with appropriate infrastructure. Derivatives are those assets whose value is determined from the value of some underlying assets, which may be equity, commodity, currency, etc. See, derivatives are basically those assets. वो कुछ ऐसे assets होते हैं जो अपनी value किसी दूसरे asset से gain करते हैं. Getting it? The derivatives are those assets or those contract which derive its value, जिसकी कीमत किसी दूसरे underlying asset से वो डिराइव करते हैं. एंड वो एसेट इक्विटी भी हो सकता है, कमोडिटी भी हो सकता है. कमोडिटी मीन्स गोल्ड हो सकता है, राइस हो सकता है, एल्यूमिनियम हो सकता है. सो इट कैन बी अ कमोडिटी ऑल्सो, इट कैन बी अ करेंसी ऑल्सो. सो दिस इज वॉट डेरिवेटिव्स मीन्स. These are used for the purpose of reducing risk. So the different forms of derivatives are options, futures, swaps, etc. So this is what trading in derivatives was also been started in the stock exchanges. Then freedom to issue shares of any denomination, granting freedom to companies to issue shares in any denomination but not below ₹1. Then reduction of transaction cost. Transaction costs have been gradually reduced through rationalization of margin systems. Then enhancement of corporate governance. SEBI has taken steps to enhance the level of corporate governance. After that, acceleration of scriptless trading. The process of dematerialization and scriptless trading has also been accelerated by the SEBI. So these are the achievements which have been achieved by the SEBI. Dematerialization means demat account. Now you don't have to take the papers or have to visit the stock exchanges again. You can just have a demat account and all the trading activities can be done through that. So this process has also been accelerated by the SEBI. So these were the following achievements which have been achieved by the SEBI till date. Okay, now let us move on to the regulatory aspects of Securities and Exchange Board of India. In this, the first is the regulatory departments. What are the regulatory departments of the SEBI? See, India's financial markets are regulated by the Securities and Exchange Board of India, that is SEBI. And SEBI is the regulatory authority established under Section 3 of the Securities and Exchange Board of India Act 1992. Okay, so what the function these regulatory department does? First is to protect the interest of the investors in securities. The foremost function of the SEBI, or the foremost regulatory aspect of the SEBI, is to protect the interest of these investors, those who are taking place in place, while those who are taking participating or taking interest in investment activities in these securities. Then promote the development of India's securities market, and third, regulate the securities market. Okay, so beside the act that created SEBI, several other government acts, including 2 enacted before the creation of SEBI, help SEBI meet its objectives and exercise its power. That is, includes Securities Contract Regulation Act 1956, Depository Act 1996, and Companies Act 2013. These are the following acts which has also empowered and also made easy for the SEBI to exercise its power and to meet its objective, that is to protect the interest of the investors in the securities, promote the development of India's security market, and to regulate the security market very effectively and efficiently. So these particular acts also made the SEBI to achieve its objectives and exercise its powers very easily. So these are the regulatory departments. Now let us move on to the next, and that comes the SEBI regulates securities market activities through 4 departments. Now how SEBI regulates its marketing activities, securities जो से basically जो डील करते हैं मार्केट में, कैपिटल मार्केट में, स्टॉक एक्सचेंज में, उसको वो 4 डिपार्टमेंट के थ्रू कंट्रोल करती है. The first one is Market Intermediaries Registration and Supervision Department, that is MIRST. So this particular department oversees the registration, supervision, compliance monitoring, and inspection of all market intermediaries for all segments of the market, including equity, derivatives, and debt. So this particular, it deals with the registration and supervision, compliance monitoring, and inspection of all market intermediaries which are taking place in the stock market, or which are participating in the stock market. तो उनके रजिस्ट्रेशन से लेकर उनके सुपरविजन, उनकी कंप्लाइंस से, वो जो भी रूल्स एंड रेगुलेशन से कंप्लाइंस करते हैं कि नहीं, all these are seen by this particular department. Okay, next comes Market Regulation Department, that is MRD. So this MRD is responsible for formulating new policies and supervising the operation of securities exchange, their subsidiaries, and market institutions such as clearing and settlement organizations and depositories for all instruments except derivatives. So this is done by the MRD. Now the next one is Derivatives and New Products Department, that is DNPD. This DNPD approves the creation and introduction of new derivative products and supervises trading of derivative operations of the stock exchange. So basically this deals with the derivatives instrument, and they see and supervise the trading of derivative operations which are taking place in the stock exchange. So this work is being seen by the DNPD, that is Derivatives and New Products Department. And the fourth one is Integrated Surveillance Department. So this Integrated Surveillance Department monitors the activities of the cash and futures and options markets and generates detailed reports at the end of each day concerning such issues as the identity of most active scripts, clients, and brokers. So this department monitors market movements, analyzes abnormal trading patterns, and if suspecting that something is amiss, initiates appropriate action. So this is what the working of this department is. It basically works as a surveillance department and see all the issues regarding the market movement, analyzes the abnormal trading patterns taking place in the market. So this all things are being done by this particular department, that is Integrated Surveillance Department. So these are the 4 SEBI, 4 securities market activities which are regulated by the SEBI. Next comes the regulatory framework under SEBI. The four legislations governing securities market are: first, the SEBI Act 1992, which establishes SEBI to protect investors and develop and regulate securities market. Next is Companies Act 1956, which is now Companies Act 2013, which sets out the code of conduct for the corporate sector in relation to issue, allotment, and transfer of securities and disclosures to be made in public issues. The third one is the Securities Contract Regulation Act 1956, which provides for regulation of transactions in securities through control over stock exchanges. Fourth one is the Depositories Act 1996, which provides for electronic maintenance and transfer of ownership of डीमैट सिक्योरिटीज. सी डिपॉजिटरीज में क्या होता है, जो भी इलेक्ट्रॉनिक मेंटेनेंस होते हैं रिकॉर्ड के, जैसे शेयर ट्रांसफर सर्टिफिकेट, अब दे आर नाउ electronically maintained, and it is very difficult for the investor to maintain these share certificates. So they basically deposit to these depositories and they take care of it. So this is what the depositories do, and this act was and the Depository Act 1996 also help in regulating the stock market. And the last one is the government has framed rules under SCRA and SEBI Act and the Depository Act. The SEBI has framed regulation under the SEBI Act and the Depository Act for registration and regulation of all the market intermediaries for prevention of unfair trade practices, insider trading, and etc. So these are the particular other acts also which has helped in regulating the SEBI to regulate the stock exchanges and the capital market in India. So this was what the regulatory aspects of Security and Exchange Board of India. And under these acts, government and SEBI issue notifications, guidelines, and circulars which need to be complied with by the market participants. Okay, so these were the regulatory aspects of the SEBI in India. I hope you have understand this lecture. In the another lecture, we will see the next half of this chapter. Till then, thank you.